Welcome back. Time now for the Word on Wall Street. Top investors watching you. Joining me now is Barron's Investor Circle newsletter editor Josh Schaefer. Also with us is Motley Fool Asset Management portfolio manager Shelby McFadden. Great to see you both. Thank you so much for being here this morning. Josh, I want to kick things off with you with a market that will not quit. I mean, sure, look, futures this morning are indicating a decline for the start of trading this morning, with the Dow down 87 and the NASDAQ right now down 180 ahead of the Nvidia quarter after these stocks have been surging in the last couple of months. But look at this market since the end of March. I mean, things are on a tear. You got double-digit gains for the S&P and the NASDAQ. Dow Industrial's up about 10% since March 31. The S&P up 16.5%, and the NASDAQ up 25.5%. Even as oil is above 107 and interest rates have been spiking. Take a look at yields this morning on the 10-year, where the 10-year is now comfortably above 4.6%, up almost 3 basis points this morning. Fox Business confirming that newly confirmed Federal Reserve Chairman Kevin Warsh will be sworn in on Friday of this week. But Double Line Capital CEO Jeffrey Gundlach told me things have changed as the chairman begins his new term in terms of the outlook for the Fed's mid-June meeting. And he says markets have been reacting. Watch this. On Kevin Warsh, the president wants him to cut rates. Can he cut rates right now? Would you ever see Kevin Warsh raising rates?
I think that based upon the term structure of the Treasury market, the odds-on bet is that the next move by the Fed will be a hike. I know that that was not the way we entered the year on the consensus thinking. People were looking for 2 rate cuts this year, but the inflation market has simply not cooperated. And it's just not possible, in my view, to cut interest rates when the 2-year Treasury is almost 50 basis points higher than the Fed funds rate.
Jeffrey.
The next move will be a hike.
Josh, your reaction.
I agree with Jeff in the sense that things have certainly shifted for Kevin Warsh coming into the Fed. And a few months ago, you would have thought first move can definitely be a cut. Now it's probably you need to convince those officials that the next move should not be a hike, which puts him in a bit more of a precarious situation. That's just given the inflation data. What I think can happen here, though, is you get a couple more months of inflation data. Maybe it starts to improve slightly, and maybe you can still, the next move can be a cut, but probably not until the back half of the year, which is a lot different than what many had expected.
Yeah.
I think you're still seeing resilience in the equity market at this point because it's an AI tech-led rally.
Yeah.
I don't know how much rates really matter for that story. You're seeing digestion within that. You pointed out, Maria, the NASDAQ's up over 25% in less than 2 months here.
Yeah.
It makes sense to see a little bit of digestion from investors, but I don't think it really crushes the bull thesis for the rest of the year. It's more of a pause in the rally, not an end of the rally.
What I love about this is about fundamentals, Shelby. I mean, you know, the market is up and on a tear since March because the backdrop is strong. Look at the earnings period we just came off of. I mean, the chip stocks this morning are under pressure because we're all waiting on Nvidia's earnings. Nvidia reporting first quarter earnings tomorrow. The chip maker expecting revenue of $78.86 billion. This will be the last of the Mag 7 companies to report this season, and virtually all of them have beaten revenue expectations with the exception of Tesla. How important is this, Shelby?
I think when we're thinking about the importance of NVIDIA earnings to the valuations in the market, extremely, right? It's a sort of bellwether, but it's the reverse, where it's one of the last to report. And the way that I look at it is there's less concern, probably for most investors, about any one delay with a specific design and more about things like backlog, because that's going to tell us the story of all of the different derivatives that are coming out of this explosion in chips. So if any of their main customers or contracts are starting to thin out, that would be the sort of thing that I'm listening for, because that's a sort of structural shift. But I would imagine that going forward, we'll see a lot of what we saw this quarter, whereas that concentration of successful earnings in that sort of top 10 names.
So do you think this resiliency continues the rest of the year?
There's a really good chance it could.
Yeah.
I mean, unless we see something like a structural reason to delay data center projects.
Yeah.
In my view, that would have to be not just a small rate hike, massive for that to happen.
Yeah, and don't forget all of those IPOs coming to market as well. SpaceX, they want to come now while we're reaching record highs.
Yeah, it should be interesting to see if people want to buy that SpaceX.
That's right.
Yeah,
Josh and Shelby, great to have you both. Thank you so much. We'll be right back. Stay with us.